quote, Old Mutual was founded in 1845 in Cape Town and is a global long-term savings, protection and investment group. It has a market cap of 116 billion rand and assets under management to the tune of around $380 billion. The group operates through brands like Old Mutual, Fairbairn, Nedbank and Mutual and Federal. It has a price to earnings ratio of 37 and a dividend yield of 3%. Let's go straight to the share price graph right now, looking quite heady at above that 22 Rand level.
So around 22 Rand, mid-20s. The embedded value in the case of Old Mutual is roughly 30 Rand a share. So a significant discount to embedded value. And if you look at that embedded value, it's a mixture of the life insurance. You mentioned brands like Mutual and Federal, Nedbank as well, in which they have the controlling stake. And people haven't really liked this portfolio of having all these different financial institutions, different line of businesses within the same corporate structure. And then to add to that, they went on an acquisition spree a few years ago, got too much debt and really got into some trouble under previous management. More recently, they've done some work on that portfolio. They've sold the Scandia operations. And at the moment, I think Old Mutual is actually looking quite attractive.
Quite attractive, but it has come from, what did it hit, 5 Rand 50? It's showing there. I thought it went as low as 4 Rand 30.
It did, yeah. That chart, doesn't reflect the bottom all that well. But you're right, because you remember they demutualized and listed on the exchange, I think at like 11 or 12 Rand a share in around the year 2000, 2001. So did quite well to get to the 20-odd share price level and then had a big fall. Why? Because in the process of demutualizing and moving to London, they got shot of all of their industrial and other assets, because at some point Old Mutual controlled the Barlow's group and all of those assets. And they then decided they were going to double down, and they went and bought anything that was for sale, basically, in the late 90s. And that included US asset management businesses, Scandia, some businesses in Asia, all this sort of thing. The intention being to build a global financial services group. Since then, and since the big fall and the crash, they've had to kind of pick up the pieces and rebuild it. There've been talk of selling Nedbank. Now they're keeping it. They're shedding pieces of the US business.
They've basically brought their focus back to South Africa.
Well, yes and no. I mean, they still have the European interests. I always get slightly confused because they've sold some of the Scandinavian businesses, but they do retain others. And the US business is quite substantial.
Yes, so they have wealth management in Europe, they have asset management in the US, they also have the Bermuda operations still, which should run off the books in the next 2 years.
Which is the old Sage Life, US Life business.
So you mustn't fall into the trap of thinking, as I have just done, that they have become very South Africa focused.
Yeah, well, you see, the trouble was when they were London listed, people said, well, we don't really like the emerging market focus. What are you doing here? But then when you're in South Africa, people say, well, we like our own local market, but what are you doing over there? So they never kind of got the benefit of either. Jim Sutcliffe used to complain. Under Julian Roberts, I think it's mostly been about just repairing. I mean, they were in some really serious straits over there.
Absolutely.
That US
People
Life business,
were saying, is Old Mutual going to be around
they'd sold
tomorrow?
a whole lot of products with guarantees in Asia, which blew up in their faces. They were under provision. They had to send capital. It was like fire sale going on. They shut down all sorts of things, walked away from some deals they'd done, expensive to buy assets in Asia and so on. Right now, though, it does look better, and that's why the share price has reacted positively. The question really, though, now, today, is it a buy at
22 Rand? And Jean-Pierre, you've got to come up with a really good, convincing story to tell our viewers that it's worth buying at 22 Rand.
Well, looking at all the insurers we're looking at tonight, Old Mutual is trading at the largest discount to embedded value. There are some concerns about the Bermuda operations, those guarantees that Paul referred to. We are optimistic that those will come off the books and not need more capital from head office. We like the fact that they have Nedbank that could be a saleable asset, US asset management that could be listed, wealth management in Europe that could be turned around and made more profitable. So we like the story.
So as it is trading at the largest discount to embedded value, it means that effectively in the sector it has the largest potential upside.
Correct. If you then also say that their return on embedded value will be at least average. We think that will be the case, and therefore we like the stock.
Hot or not on Old Mutual?
Well, it's a broader philosophical issue that we can discuss through the show, but I don't like the lumpiness of the insurers' earnings and the lack of transparency with regard to their real valuation. So I'm going to go with not hot, and I'll explain myself as we go.
Jean-Pierre, I need a definitive from you.
Hot.
Hot.